are you?
I'm good. How are you?
I'm good.
Are you getting them back all settled and everything?
Yeah.
Well, let's get started. Markets are starting to level off a little bit. What do you got going into today?
So I've just been thinking a lot about everything we went through. I'm still trying to wrap my head around the shorts and trying to understand that piece. That's still a little bit foggy to me.
Okay.
But everything else that we went through, really made sense. I've got it in my head: the S&P 500, the Dow Jones, the NASDAQ, the Russells, futures. We kind of talked about dollar cost average. I have to sign up for Stash. I haven't done that. Did you send me a link?
Yeah, I emailed it to you.
Okay, so I'll put that on my list to do right after this.
Now, the one thing about Stash is it's for our longer term stuff. Remember that.
Yep.
It's for our longer term stuff. Because when you put it in order, it doesn't instantly fill it. Right? It's to build a position over, if you enter the order in the morning, it'll get filled probably within a couple hours, but it's not like we're trying to pick bottoms and pick tops like we do intraday.
Okay.
This is for the longer term stuff. And I wanted to mention this before I forgot. Don't do drugs. Okay. That's just from anything pharmaceutical related.
Oh, I thought you were making a joke.
No, I did that to kind of throw you off. But yes,
okay.
Anything that you see is biotech, pharmaceutical, any of that stuff.
Okay.
You don't want to trade that. Okay.
Why?
If you have a longer term company you like or something, great. But those are so insanely volatile because we don't know where they are in development of drugs. We don't know where they are in what clinical trial they're in. So those things can be absolutely crazy. So that's a hard and fast rule. Anytime I'm looking at stocks to, possibly invest in, if I see biotech or pharmaceutical or something like that, I just pass. All right, pass. Okay, so let's nail down this short thing and get you understanding this short thing. Now, let's say, for argument's sake, don't worry about the chart, where it is.
Okay.
Let's just say you think that this company and say the overall broad markets are tanking. Oh, write this down. As thoughts come into my head, I want to share them with you. 80% of the ships rise and fall with the tide. Okay?
Okay.
That means if the overall markets are in an uptrend, 80% of stocks are going to be in an uptrend.
Wow. Okay.
Okay. And it doesn't move it doesn't move dollar for dollar or tick for tick with them, just the overall trend. So, and then if the overall trend of the broad markets is down, then 80% of stocks are going to be trending down. Okay. So let's say you think this stock, all right, is going to go down.
Yep. Wait, how would I even think that it's going to be going down?
That's what we'll get into.
Okay. So I'll just pretend I know
this is just the mechanics.
Got it.
Of understanding what shorting is.
Okay. Got it.
All right. So you think this is going to go down. You have borrowed 100 shares from your broker.
Okay.
And you sold those 100 shares at $8.
Okay.
So $800 goes into your account.
Yep.
All right. Now, your broker, okay. Here it is. All right, this is our broker up here. All
yep.
Right, we'll just use B for broker. All right, this is our broker. All right, he's over here, and you owe him, right? You owe him 100 shares.
Yep.
So you're in debt, so to speak. I know we hate that word, but you're in debt to your broker 100 shares.
Okay.
So, like I said, your broker doesn't care. I'm personifying the broker, talking like it's not some big corporation. You don't owe him any money. You owe him 100 shares of this stock.
Okay.
So if this stock now, you sold it at $800, right? Say this stock goes down to right here. Say it goes down to $7.
Okay.
Okay. Because what's the opposite of what you did? You sold, right? So
Yep.
what's the opposite? What do you have to do to actually close that position?
Buy.
Exactly. So you buy 100 shares and that costs you $700. Okay.
Okay.
So
Okay.
you sold them, you borrowed them from your broker, and then you sold them.
Yep.
And $800 immediately hits your account.
Right.
Right. So all you owe your broker is shares.
Yep.
And you need to buy your shares back to give them back to your broker.
Ah.
So you
Okay.
buy them back at $700. So you spent $700,
But you had 800 in there.
but you had 800 in there. So you made $100.
Okay. Makes sense.
Yep. And all this, like, it sounds complicated, but literally
It's not.
happens. But it happens instantly when you push a button. You don't have to worry about all this mechanics of it, and it happens.
Interesting.
Yeah. So that's how you, and I don't like the word bet, but that's how you bet the market is, or whatever shares are going down.
Okay. So, I mean, this is me talking stupid math, but let's say the same scenario. I bought 100 shares at $8. So it was $800 went in there. I mean, sold. So 800 went in there. And then let's say I bought the 100 at $5. I'd be plus 300. So I understand. So you almost want it to go down even lower. And then you end up more, which sounds so counterintuitive.
Right. But that's how we trade the market. Both.
Interesting.
Both ways.
Do you, not just what you're teaching me, do you do both?
Yeah.
Do you do shorts as well?
Yeah. This morning I made 3 trades today. Okay. The first one was a long, meaning I bought, this is on the ES futures, bought long and it went up.
Yep.
The second one was long, a long trade, buy it and it goes up. And the third one was a short trade.
Oh, okay.
And it went down. Okay. And those are my only 3 trades today. Let me show, just so you have an idea of what all this is. Let me just show you my trades today.
And did you already do them? Like,
what's
already? That? It's already happened? You've already done them today?
Yeah, I'm already done. I'm done for the day.
But it's 9:30, 9:45. How are you already?
Well, the thing when you're trading futures like I do, it's almost like you're at a party and they're being really nice to you and you don't want to overstay your welcome.
No.
You know what I mean?
Yep.
It's very volatile. But here, just so you know, you get an idea of what I do. This is the ES. These are the S&P 500 futures.
Okay.
So the first trade I took today, and there's a lot of backstory into the reasons I took these trades, but the first trade I took today was, this is at 9:30 when we opened.
Okay.
I got in, let me go into a little bit smaller time frame. Here's a 5-minute. This is a 5-minute chart. So every one of these candles is 5 minutes. Okay.
Jeez.
So where's 9:30? There's 9:30 right there. So the first trade I took today was about 9:35. So I bought down here.
Okay.
And it went up 3 points in my favor. And I took half my position off.
Okay.
And then I took the rest of my position off somewhere in here. So I made on that first.
Does that mean selling? Half your position off? Does that mean selling?
Yep. So I bought it first.
Okay.
I bought it first. I took half my position off. And then I took my other half of my position off up here. Okay. And then I did that again. I bought, and this isn't exact, but I bought down here and I took half my position off and then another half off up here. I keep that other half on to see if it's going to, by chance, just
interesting. Okay.
explode, right? And go Crazy.
Yep.
And then my short setup was in here. I had to chase this one a little bit, meaning I like to get in where the selling is, but this would happen real fast. And I got in short somewhere in this candle. And then this one hit my first target where I took 50% off. But then when my first target gets hit, my stop loss, remember we talked about a stop loss?
Yep.
When my first target gets hit, my stop loss goes to where I entered. So I can't lose any. It's just
got it.
That second half of my position is just a
Yep.
wash.
Yep.
So I got out on 50% of my position. My stop loss automatically moves to my entry. And then it shot up real fast and took out the second half of my position at my entry. So I made enough. I made the first profit, but just not the second one.
Got it.
That's it for my day.
Wow.
Yeah.
Okay.
That's how we can play both sides.
Right.
Right. And it's just a matter of which instrument you use. But yeah, that's a good example of how you can trade both sides.
Both sides. Yeah. Yep.
Right? So, okay. So as far as, being short and selling short.
Yep.
That's all it is, right?
Yep.
So when we're talking about a stop loss, because we trade every single trade we make, unless it's a long-term investment, right?
Yep.
Every single trade we make, we have to have a stop loss because that protects our capital. It protects ourselves from ourselves too.
Yep.
Because you don't get into that mindset of, it's going to come back. It's going to come back. It's going to come back. And then a week and a half later, it's so far away that, it's worthless.
Right.
So as a stop loss, since we're selling these shares first, we would have a buy stop loss to buy back the shares at, however, because remember, if we short and $800 goes into our account, we owe the broker 100 shares. Well, if we have to buy it back at $9, we lost $100.
Correct.
Right. So our stop loss is actually a buy.
Got it.
Here. So it's kind of
smart. Yep.
Flipping things around.
Yep.
If you sell it first, we got to buy it back.
Right.
Okay. An easy way to remember that, and the term that you'll hear is when you're short something, meaning you're short, basically that term short comes from you're short shares. You borrowed them. You're short them. You need to give those back at some point. Right.
Yep.
But you'll hear buy to cover.
Okay.
So if we're short, we need to buy to cover that position.
Correct.
So if you hear that term buy to cover, that just means you're short and you need to buy the shares back to cover what you owe to the broker.
Yep. Okay.
Okay. So questions on shorting?
Nope. I actually finally understand that.
All right. So we're clear on short, you think?
Yes. Yep.
Okay. All right. We're going to go over. Okay. And this is lesson 1 of how a chart actually works.
Oh, okay.
All right. It's not complicated if you break it down and think about buyers and sellers. Okay. Just think, because everything revolves around buyers and sellers.
Yep.
Okay. So let's take a stock that moves around. I'll get off there. Get off there. There we go. Okay. Let's take a stock that moves around a lot. Okay. Actually, I'll go to Exxon because that's a very, very good one.
Oh, and that's yours.
Yep. Okay. This is a really good example of how support and resistance works.
Okay.
This is a daily chart.
Goodness sakes.
Yeah, so this is a daily chart. So every one of these is a day. Okay, this goes back all the way to 2022. Okay, so you have to imagine it as a rubber ball. Like, remember the little crazy balls we had when we were kids and you throw it and then they go
Yeah.
Nuts, right?
Yep.
Well, a lot of the markets, that's how they move. So you can almost picture it. All right. And I've drawn these lines up. You can almost picture the rubber ball, right? So when we get down to this level, you can almost picture that's where the buyers are sitting,
Okay.
right? Because we go up from there,
Yep.
right? And then this is where the sellers are just sitting and waiting to either short this,
Mm-hmm.
right? Or take profit from down here.
Yep.
So you can picture now, okay, if we're in the middle, that's probably not the most opportune time for me to be buying and selling.
Okay.
Because we want to buy or sell
Yep.
extremes.
Yep.
Right? Imagine it's a rubber band and it stretches to the top and then snaps back down to the bottom, and then it stretches too far and then it snaps back to the top, kind of like that.
Yep. Yep.
Okay. So now that we have seen this on the chart, right, what we look for is like, that whole thing, two data points make a line, right? You need you need 2 points in time for a top or a bottom. So we got, 2 points in time right here. So now we know, hey, when we get up here, right, that's probably going to be resistance.
Yep.
When I say resistance, I mean it's going to be hard for price to get any further than that.
Yep. Okay.
So down here, we call support.
Okay.
Up here, we call resistance. So when we come down, the buyers hit the market down here. They're like, cool, this is where we're buying. This is where we're going to sit our orders and just wait, right?
Okay.
And then it goes back to the top. And then the sellers are up here, okay?
Mm-hmm.
So we get back to the top and we sell it. And then all the buyers are just waiting for price to get down here.
Yep.
And then they buy it. And then it gets back to resistance, the rubber ball, right? If this is a floor and this is a ceiling, and you're just bouncing that rubber ball. And then it hangs out up here for a while at resistance and then falls back down to the floor.
Okay.
Now we're back down at the floor. So more than likely, we're going to go back up to the top.
Yep.
Right? That's all support and resistance is. Okay. And this is the fundamental dynamic that moves our markets up and down. Okay. It is support and resistance.
Okay.
And it's really that simple. Now, obviously, there's a lot of not innuendos, but there's a lot of differences in where support and resistance is and all that good stuff. And we'll get into that. But understanding, if you can look at a chart and just zoom out to a larger time frame like this is a daily chart. And your brain can start to pick out, okay, this is what has been resistance in the past.
Okay.
And this is what has been support in the past.
Okay.
Right? So you know that, say in this situation here, we're back down at support, right?
Yep.
And we draw support with a great big felt tip marker, not a sharpened pencil. Okay. So it's an area.
Okay.
Right. It's an area. It's not, like I said, draw it with a great big felt tip marker, not a super sharp pencil. So it's just an area.
Okay.
Right. It's just an area. So now that we're looking at this and you're able to identify, okay, this has been support down here. And this is where we are right now. So this wouldn't be that bad of a time to get long thinking it's going to go up, right? Because, and if it doesn't, we've got our stop loss in place and it just didn't work, right?
Yep.
But that's where we want to be buyers. We want to be buyers at support.
Yep.
and we want to be sellers, which would mean, taking profit. Because if you're buying it to take profit, you'd have to sell it.
Right.
Right. We want to be sellers at resistance.
Yep.
So this wouldn't be a bad time, like on this stock, this wouldn't be a bad time to get long because it's got room, to run all the way back from 104 to call it up here 119-ish.
Right.
That's a good trade. Right. So let's look at a couple other ones. Let's look at trying to think of some other couple good. Let's look at some of the big stuff that you know about. Okay, so here's Tesla.
Yep.
Okay, here's Tesla. Everybody knows Tesla.
Yep.
Well, if we look at it on the larger time frame, right? This is the daily chart.
Yep.
Each one of these is a day. Well, we can see, right, that when we get down kind of in this area in the past, that's support.
Yep.
Right? So this wouldn't be a bad time to get long Tesla. Right? And we know the resistance is pretty much this a long way.
Right.
Right? So we know the shorter term, if we wanted to be a little bit more conservative, the shorter term resistance, anytime you're identifying support or resistance, just make it easy on yourself. Like, where does it stop going up? That's resistance, right? Where's the stop going up and it can't go any further? Well, that's, as of right now, that's kind of up here.
Right.
Right? Kind of up here in this area. So here's support. Here's our resistance.
Yep.
So that's not a bad, that's when we're talking a stock like this, that's from 220 up to 270. That's a $50 move per share.
Right.
So, but that's support and resistance. So we wouldn't want to be a buyer up here.
No,
because we're buying the ceiling.
Right.
Right. We're buying the ceiling. We'd want to be buyers
down
here at the floor. Right. So that's all support and resistance is. And if you can understand and start to just pull up a chart, I would say the best way to do it is look at on a daily time frame, right? Look at on a daily time frame. And you can your eyes and your brain can start to identify that because it takes, looking at it a bunch of times.
Right.
And say, okay, price stops going down here, stops going up here. So now I've identified support and resistance.
Yep.
And that is, in a nutshell, everything about how our markets move.
Yep.
Now, with support and resistance, I'll show you this. Okay. Think of the rubber ball thing. We can identify, obviously, here's our support. We bounced twice, right? Well, here, okay, we'll call it right here. Here's kind of our resistance area.
Yep.
Right? So think of the rubber ball. All right. Yep. Now, when we're talking about support and resistance, and I'm bouncing that rubber ball off the floor and it's hitting the ceiling, right?
Yep.
Okay. If it breaks through that ceiling, what becomes its new floor? Think of the rubber ball. If it goes through the ceiling, all of a sudden that ceiling then becomes its new floor.
Right.
Right. So if you're bouncing it and it's, bouncing from the floor to the ceiling, floor to the ceiling, floor to the ceiling, and then it breaks through the ceiling, then that ceiling, as the ball comes down, becomes its new floor. Right. So in a situation like this, here was our support.
Okay.
here's our resistance up here. We couldn't go any further.
Okay.
Oh, look, we broke through the ceiling. The rubber ball broke the ceiling. Well, now that ceiling becomes its new floor.
Yep. You see that.
Do you see that?
Yep.
So now this is our new support. So
Yep.
if you think about it, like eventually, like if you've got your rubber ball and it's hitting the floor and hitting the ceiling, hitting the floor, hitting the ceiling, it's, how do I say it? It's damaging both of them. It's damaging the ceiling and it's damaging the floor. Imagine it's a really strong rubber ball.
Right.
Okay? Eventually, it's going to either break through the ceiling, or it's going to break through the floor.
Right.
Right. So if it breaks through the ceiling, right, if it puts enough pressure on it and busts through the ceiling, then very often that ceiling now becomes its new floor.
Yeah.
Right.
Yep.
And then the same thing to the downside. Let me see if I can find one. Yeah, right here. So if we're looking right here, here was support, right?
Yep.
We've got our rubber ball bouncing up to the top, back down to the bottom, up to the top. Well, it broke the floor, didn't it? It broke the floor right here. Yes, it broke say the floor is like right in here. Remember, we draw it with a big felt tip marker, not with a exact pencil.
Yep.
So we bounced off the floor, hit the ceiling, bounce off the floor, hit the ceiling. Finally broke through the floor. Well, when it bounces off the new floor, what becomes its new ceiling? That previous floor.
Yep.
So just the opposite of busting through the ceiling.
Yeah.
Yeah. So when the ball finally falls through the floor and goes into the basement, call it, and bounces off the basement floor, well, then its new ceiling is going to be the first floor it just broke through.
Yep.
Right. And that was that price coming all the way up here. And then it can't go any higher because it's got the dang floor. It's got the dang floor in the way.
Yep. Yep.
And understanding that puts you like well on your way to understanding a chart. Is just being able to identify support and resistance. And again, like I said, it's very simple. Don't make it any harder than it is.
Okay.
If you've got an area that the price can't go higher than, that's resistance. If you got a price or if you got a level that price can't go lower than, that's support. Because everyone looking at that chart is seeing the same thing you are.
Right.
That, Sarah, is huge as far as, like I said, being well on your way to being able to actually look at a chart and understand why price is going to go up and down. Right. And if people, would come up, why did, just, as if you were going to explain it to someone, well, why did Exxon crash? And then why did it stop going down and start going back up? Well, because it ran into support.
Yep.
It ran into the floor.
Yep.
Right. So it's more common for support and resistance to be respected than it is for it to break. Right. If we try to anticipate when it's going to break, those are expensive bragging rights. That's what I say. Because eventually you'll be right.
Yeah.
But how many times do you have to be wrong until you're finally right? I'll leave those bragging rights for somebody else. Right? You'll hear me say a lot as we go forward. We go with what we know. Okay. We go with what we know. We go with what price has already shown us.
Okay.
We don't try to anticipate something that hasn't happened yet.
Okay.
Okay. Because like I said, all we're doing is putting probabilities on our side.
Yep.
That's all we're doing. So as we're looking like at this one, at this Exxon, the only thing we know right now, the only thing we know is that when it gets down here, it bounces. When it gets up here, it stops going up.
Yep.
We go with what we know. We
Okay.
don't have to try to make something new and fancy out of something that doesn't even exist yet.
Okay.
Right?
Yeah.
Because probability, all probability is the higher degree of one thing happening over another. Right? That's all probability. Okay. Right? And the probability is on our side if we're looking to get long at the bottom.
Right.
That's it. That's
yep.
all trading is. So, as you're going through and, you're looking at different stocks and stuff like that, just look at them on a large time frame and start looking at where and draw lines. Where's support? Where's resistance?
Yep.
What has price already told us so far? That's what you're looking for.
Right.
Right. What's price already told us so far? Right. And that works on, any chart, any time frame, anything like that. Just remember, the bigger the time frame you're looking at, the more powerful the support and resistance is.
Right. Okay.
If we're looking here on the daily chart, which each one of these is a day.
Yep.
This is more powerful than if I zoomed into like a 1 minute chart, right? Okay. And I'm looking at like where the 1 minute support and resistance is.
Yep.
This is more powerful. Why? Because there's more eyeballs. There's more eyeballs.
So do you apply support and resistance when you're looking at stocks? Are you just using support and resistance? Are you using it obviously for investing because that's long term? Mm-hmm. Are you also using that same theory when you look at day trading?
Yeah, support and resistance is the basis for everything we do.
Okay.
Right. Everything we do. Because if you break it down, we want to be, and this makes trading sound really easy when I explain it this way. We want to be buyers where people are buying.
Yep.
And we want to be sellers where people are selling.
Yep.
And that is at support and resistance. Where people get into trouble trading is when and I'm not perfect by any means, but where people get in trouble trading is trying to anticipate something brand new that hasn't happened yet.
Right. I get that.
Right. Or where people get into trouble is, so say on this chart here, people see, now we know, right? We know that up here is resistance.
Uh-huh.
You following me so far?
Completely.
We know this is resistance up here. Well,
yep.
We've already identified that. Okay. Yep. Well, people see these big, well, they're yellow on my screen, but I say green. People see these great big green candles flying higher. Yep. Right. And they're like, I want to get in that because it's going up. Right? No, we're actually not. This is not the highest probability place to be buying it because we know that we're running into this resistance. But you could see that, right? Like if you're watching it and you see it flying higher, you're going to be like, man, I want to be a part of that. That's the FOMO, the fear of missing out.
Yep.
That we have to control. And then obviously you see we get to our resistance.
Yep.
And then it falls.
Absolutely.
Right?
Yep.
Same thing here in this situation. People see the big red candles and they're like, ooh, we're going to crash. I want to be a part of that. I want to short this market. When in actuality, we're just coming back down to support. And we're going back up. Right? So that's where a lot of retail traders, and when I say retail traders, I mean people like you and me, not big money institutions. If you hear me use that term, retail traders, that's just us, right?
Okay.
That's where retail traders get into the most trouble, is they want to chase price at the exact wrong time.
Okay.
because they see those great big moves.
Right.
We want to be systematic and controlled, and we want to be buyers where people are buying.
Yep.
And sellers where people are selling.
Yep.
Okay, I want you to follow me here. I think you understand enough now to understand this part, and you'll see, and this will kind of make you, when I first learned this, I was like, are you kidding me? Those yeah. This is how our markets truly move up and down. Okay. Let's take this example back here. All right. This is how retail traders get abused.
Okay.
So we've got all these retail traders, right? The big green candles, big yellow candles.
Yep.
And they're all buying, right?
Yep.
Because they see it flying higher. They're all buying, right?
Right.
Okay. If we get a bunch of buying up here.
Yep.
Let me ask you a question. What is one thing we never trade without one unless it's an investment?
What is one thing we never trade without a stop loss?
Yes, correct. We never trade without a stop loss, right?
Yeah.
So if you have people buying up here,
yep,
where they shouldn't be,
yep,
what type of order are their stop losses? If they're buying up here, what type of order are their stop?
What type of order? You mean between a short and a long?
No, between buying and selling. If they're buying up here, their stop loss has to be a what?
Has to be below? I mean, it
has to be a sell order is what I'm getting at.
Oh, okay. Got it.
Okay.
Yep.
So if they're buying up here where they shouldn't be.
Yep.
All these people that chased this.
Yep.
Have sell orders, which are their stop losses.
Yep.
Right? And it's those orders that start getting filled. And then all these people have to sell. And that's what drives us down.
Okay.
Because
they have that stop loss in place.
Because there's all this volume up here, people buying the high.
Right.
And all their stop losses are down here, which are what? Sell orders.
Right.
So that's how we start these moves from lows to highs and highs to lows.
Yep.
Is these people's stop losses start getting hit.
Okay.
Right? Same thing when we get down to lows. You've got a bunch of people selling down here. You've got retail traders selling, trying to short this.
Yep.
And if they're shorting it, what are their stop losses then? What type of order? Buy. Yeah, because they're selling it first, right?
Yep.
So their stop losses are buy orders.
Right.
And then they get enough of them, and then price pops its head up, and guess what all these people have to do? They have to buy.
Yep.
And that starts our run up higher.
Back up. Okay.
And then everybody piles on as it's going up, and then it gets top heavy, and you have too many people buying.
Yep.
And then they have to use their stop losses as it's coming down.
Yep.
Same thing over and over and over. Wow. So what starts these moves higher and lower are actually people, the retail traders getting in and then having to cover at the wrong time.
Right.
And it's just lather, rinse, repeat.
Okay.
And you don't have to know that, right? But it's good to understand kind of our market dynamics on an intraday basis.
Yep.
So you can stay on the right side of things.
So I'm curious. So with looking at the support and resistance, so when you're looking at it for investing, are you looking at a broader picture of like months over months? Or how are you? I mean, obviously, I'm curious when you're looking at that versus just day trading. Are you looking at different snippets to understand and look at the support and resistance?
Yep, absolutely. What I will usually do, my breakdown when I'm looking for investments.
Yep.
Number one, what are the broad markets doing? Like, what are the S&P, the Dow, NASDAQ? What are those markets doing? Are we in an uptrend or are we in a downtrend? Because remember what I said, 80% of ships rise and fall with the tide. You could buy the best company in the world, but if the markets are going down, that company's more than likely go down too.
Yep.
Right? So see, when you break it down, it's really not that.
No.
Right? Mm-mm. It's really not. We just want to be on the side of the good guys. That's
right.
So I'll look at those first.
Okay.
And then I will look at a stock on a weekly time frame. Okay. So right here, I can go and just put this on a week.
Okay.
Right? So here's the weekly time frame. And this goes all the way back to March of 2023.
Okay.
Right? So I can see that when we get down here, this has been going on for 2 years. Yeah. Wow. This has been support for 2 years.
Yep.
Okay. So that's why you can see my average price now is 104.4. You can see every time we get down here, I keep adding to that position, right? A little bits at a time. Because every time I buy it lower than my average cost goes down.
Yep.
Right. I'm like, okay, cool. We're down at a decent spot.
Yeah.
That's about it when I'm looking at investments, right?
Okay.
And obviously I want to I like to invest in companies that you've heard of that aren't going away anytime soon.
Right.
You know what I mean? You can buy things like this with anticipation that it might break out at the top of this, right? You don't want to buy up here thinking it's going to go higher, but you can buy down here with the anticipation that, hey, maybe this time it's going to go through. And if it doesn't and it rolls back over, great. I'll take profit and just wait for it to get back down here again. Right. Or maybe I leave a little bit of my position on just in case if I've got 100 shares, maybe I take off 75 when we get to resistance. Then I leave 25 just in case it continues up. Right. But that is all for my investments, that is all I do. Now I look at other things. We'll get into dividends and all that down the road. Okay. But, so this is one that, like I said, I invest in every month. Another one let's take silver. Okay. So this is an ETF. Okay. What that means, the term ETF means it's an exchange traded fund. Okay. All an ETF is a bunch of different stocks put together. So you don't have to trade each stock. You can just trade the bundle of them. Imagine it's just a bunch of bundled together stocks. Okay. That's all an ETF is. Like, a good example of an ETF is SPY. Okay. It's called, people call it the spiders. That's the S&P 500 ETF. So that's all 500 of those stocks. Wow. In one ETF. So you don't have to trade all the different stocks. You can just trade the ETF and it's calculated to all of them. Genius. Okay. Right. And you can do that for most anything. You can do that for tech stocks. You can do that for silver, gold, natural gas, technology, this, that, and the other. There's an ETF for pretty much everything. Wow. Okay. A good example, say you're starting to see a trend in, say, feed, like chicken feed, right? Say you're seeing a trend that chicken feed is starting to cost more and more and more. I guarantee you there's an ETF out there for chicken feed. Interesting. There probably is. There's an ETF. Trust me, if it goes up and down and somebody can make money off trading it, there's probably an ETF for it. Interesting. Right? So here's silver, right? This is another one. Okay, this is the silver ETF. It's a bunch of different silver. Sure. It kind of tracks the market on silver. Okay, but let's go out to the weekly. Okay, now that you know what you know, So here was our support, kind of down
Yep.
here in this area. Couldn't go any
Yep.
further. Well, here was our resistance,
Yep.
right? Couldn't go any higher than this. Couldn't really go any lower than this. So we can just eyeball resistance,
Yep.
support.
Yep.
Well, look what happened. Remember the rubber ball?
Yep.
If it breaks through the ceiling,
It creates. Yep.
that ceiling then becomes the new
Floor. Mm-hmm.
right? And that's what we're bouncing off of right there. So there's our new support.
Yep.
So there's a high probability that silver is going to go up from here.
Yep.
As long as it doesn't break below this floor, and then it can fall back to the old floor.
Right.
Right.
Okay.
But if you think about it like that,
Yep.
just support and resistance,
Yep.
right? Ball bounces, breaks through the ceiling. That becomes its new floor. Now it's kind of hanging on to the new floor, and there's its new ceiling. It could bust through the new ceiling, and then that new ceiling could become its new floor. And it could just, that bouncy ball could just keep bouncing and bouncing and bouncing higher.
Right.
That's it. So that's what I have on silver right there. I bought it kind of when it hit the new floor.
Okay.
Right. Let me ask you, is your head swimming, or is this making sense?
Oh, it's making sense. It's totally making sense. It's just a very big concept. And it's crazy that it's almost that simple.
I was waiting for you to say that. People say that all the time. They're like, it's got to be more complicated.
Right.
No, it doesn't. No, it doesn't. That's when
Okay.
we as human beings try to make things way too complicated than they are. Right?
Yeah.
Remember, we go with what we know.
Right.
Right now, what do we know? Well, we know that when price gets down here, people are buying it.
Right.
That's all we know.
Right.
So let's just do that.
Okay.
Right? And
Yeah.
that will put probabilities on our side.
Right. Okay.
We don't have to be a superhero and pick the exact new thing that's getting ready to happen.
No.
We don't.
Okay.
So we know what the chart is telling. So what you're learning right now is you're learning how to read a chart
yeah.
without really even knowing it, right? It's just support and resistance.
Yeah.
So here's another perfect example. Look at, here is our support. We couldn't get through.
Yeah.
Couldn't get through. Bouncy ball.
Yeah.
Right? Bouncy ball. Here's our resistance.
Yeah.
Right? We couldn't get through. What happened? We broke through the ceiling, didn't we?
Right.
So what becomes the new floor?
Yep.
That ceiling.
Yep.
And now we have our new new support down here.
Yep. Yep.
That's it.
Yep.
That's it. That's putting probabilities on your side.
Yep.
And as a trader, if, we can take trades that, have the, 2 green squares on the roulette wheel in our favor.
Right.
I used that analogy with you, did I?
Yes, you did.
Yeah, because that's what puts it in the casino's favor.
Right.
Is
Yep.
those 2 extra green squares. Well,
Yeah.
if we can put those 2 extra green squares in our favor and probabilities on our side, we know that over time, if we manage our risk correctly, like we talked about, and that we'll get into, we just go with what we know already.
Right. Right.
Right? It's really not harder than that. You're gonna try to make it way harder. Trust me.
Yeah.
Your brain's gonna be like, well, no.
Nope. I'm going to stop it. I'm going to keep it simple.
Right?
Yeah.
So, one thing that you can do in the near future too, if you want to, is download. This is just called TradingView.
Okay.
TradingView.com. It's free.
Okay.
Okay. There's paid versions and all that. I don't even get the paid version. There's no need for it.
Okay. No.
But TradingView.com, and that's what I'm using right here.
Okay. And is it also give you those tools where you're putting in those crosshairs to show me the support and resistance?
Yeah, it's all
okay.
Over here on the side. See all these?
Okay. Yep. Oh, yeah.
Yep. All those. You can
Got it.
have all sorts of different little fun drawing tools and
Wow.
whatever. But when you download TradingView, let me see if it'll let me do this. And people. Oh, I don't want the chart. There we go. Okay, it'll look like this.
Okay.
Yeah, and then of course they're trying to upsell you on all sorts of fun stuff. All you have to do when you go here, go to products right here.
Okay. Okay.
Products and just the chart, super charts.
Super charts. Okay.
Yeah, that's all you need. And you just click on super charts, and then you can.
Okay.
I think it comes out white. I'm not sure how it defaults, but you can. All you have to do is like right click anywhere and go to settings.
Yeah.
And you can change all your colors. You can change all your whatever that works for your eyeballs.
Yeah.
And then you can have charts to look at, to play with.
Okay.
And all you have to do is just type in up here, you just type in whatever ticker symbol you want.
Okay.
And then you can start pulling something up.
Wow.
And looking at a chart and identifying support and resistance. And it will tell you at any time where we are. Right. Okay. So like right now on this chart, where are we? Well, we've just recently bounced off support. That's where we know we know where we are.
Yep.
Right?
Yep.
Just think of the rubber ball.
Yep. Okay. Yeah. Okay.
That's it. Cool. Okay. Any last minute questions?
No, this is really cool.
You look excited. Like you're like, this is kind of making sense.
Well, it kind of is. I'm waiting for you to like pull something out of the hat and say it really wasn't that simple. It's really super complicated.
No, for our longer term like investment and swing trades and stuff like that.
Right.
This is really.
It's stupid simple.
Okay.
Yep. Okay.
All right.
It's awesome.
Well, good. I'm glad.
Sounds good. Thanks, Aaron.
All right. Thanks, Sarah. See ya.
Bye.
All right. Bye.